Let's talk about currencies now, where the dollar index is trading at 7-week highs on strong US jobs data, while the greenback also has hit a one-month high versus the euro. Investors are focusing on the US Fed and Bank of Japan policy meetings later this week. The Indian rupee, in the meanwhile, has declined on dollar purchases by importers. Liquidity remains tight on outflows for advanced taxes for the current financial year by March 15, but a strong IIP data today for Jan supported the rupee sentiment, capping too much of a losses there. So we are holding around 49.97, 0.25% of a decline coming in there. Let's get in Ashok Gautam. He's Senior VP and Head Global Markets and Treasury at Axis Bank, and he joins us in the studio. Mr. Gautam, hi, welcome to the show. Let's start with the Indian rupee first, and how do you read the IIP numbers today?
I have a different take on it, because if we look deeper into the IIP data, what we see that it comprises bulk of consumer non-durables, and which has shown a phenomenal increase of, if I'm not wrong, 42% or so.
Yeah.
So if you take that out, then probably what we have is a negative number or a very small number. So I am not too much buoyed by the IIP numbers which we have seen today. So this is my take on IIP numbers.
How have you read the CRR cut on Friday, and what's your view on what could happen during the monetary policy, the budget, in this week itself?
In fact, we have been expecting some kind of RBI action before the start of the fortnight, and that came just one day before. And the debate was always there whether 75 basis point or 50 basis point, but I think 75 basis point, given the situation which we all were in, because there was a structural deficit of liquidity. And today's LAF numbers have also indicated that that deficit remains. It is at minus 130,000 crores. Now the point which we have been now saying, that the advanced tax outflow, which is going to come this week. So that will be, now that number is somewhere around 70,000 to 80,000 crores. That's a big number. So whether 75 basis point of CRR is going to, CRR cut is going to help. So now that leads to the next question, whether there will be another cut expected on Thursday, just before budget. I have my own doubts, because I think RBI has played its cards, 75 basis points. And then now they will say it's the turn of the government to place the card on the table.
Last week was an election week, and we saw rupee getting impacted because of that. And this week you have hordes of numbers, data, and government announcements coming in. How do you see the rupee closing this week?
Rupee, what we see that will continue to have a weakening bias, as we had maintained when we spoke last time in your studio, that there was a chance of rupee going towards 50.20 or 50.50, and in fact it went beyond that and came back sharply. But we still maintain that in this month the rupee will continue to have a weakening bias, and if we have to give a range for this week, we will still like to give 49.80 to 50.75.
This is about the domestic cues, but much is happening in the international markets as well, with dollar index at 7-week highs, I beg your pardon, and the euro also, looking very concerned. What kind of ranges are you working with there then?
Euro, Manisha, as we have always maintained, that 1.3480 was a critical level where we have to see whether it closes above that on a weekly basis. But it touched there and it came back sharply. And now what we are seeing, that if it closes below 1.3040 on a weekly basis, then room is open up to 1.2525. But that's further down the way. We'll have to see how far we go there. But for the time being, we believe that Euro card has already been played in the market, and there will be some kind of weakening bias will remain. And as you mentioned about the USD index, in fact the same thing, if we see what is going to happen in the pound, so the weakening in the pound is also impacting the USD index. And USD index right now is poised at a very crucial level of around 80.17 or so.
80 exact on your screens right now.
80 exactly on that screen. And what we believe, that if it breaks 80.20 convincingly, then there is a chance of it moving towards 80.80 and 81.20. But we'll have to see how it goes there.
Let me also get a word on the commodity currencies, Mr. Gautam, because we've seen a commodity sell-off in agro, in non-agro. All of those commodities have declined. There has been good data coming out of US. How are you looking at an Australian dollar, New Zealand dollar? Because Jan was a very good month, Feb saw some consolidation, but March really seems to be letting it all go.
We have been maintaining that the 1.0850 for Aussie was to be a high level, and it did touch that, but it did not break it. We had said that that was a very critical level. So it went up to that level and it came down. Right now what we are seeing, the kind of things which are coming, and we heard the two experts in your program some time back, the way the current commodities are now poised, and what we have heard out of Australia, their governor of the central bank has said that there is a possibility of some kind of rate reduction later on as they go. So the comments were quite dovish. So what we believe that now at the level where it is around 1.05 or so, it will remain here with a little bit of a weakening bias in the coming days. The same goes for the New Zealand
dollar as well.
Yeah.
One quick word on your expectations on what Japan and US can do in their monetary policy meetings this week.
Japan, I believe, has already announced a large program to buy JGBs. I believe it's now 65 trillion yen, if I'm not wrong. So this is going to be a signal for the yen to touch 83.80 or so. Okay. And move then towards 85.00. But we also have to see the other side. This is their year-end month, and where a lot of repatriation takes place of the profits of Japanese companies. So we'll have to wait and watch. I'm not just betting immediately that it is going towards 85 so soon.